So now that we understand that the chart reflects the price action of the stock, which is driven by the human emotion, now that we've seen that there's some predictable human behavior that can give us opportunities to trade and to make money, the question is, how do you come in and draw support and resistance and be able to build a stock up that you've never looked at before, build the analysis up, and trade it from scratch? And I'm going to show you a technique that we can do this in just a few minutes. The truth is, when you're done with this, you'll be able to take any stock you've never traded before in a matter of 15 or 20 minutes, have it all charted up and ready to go trade this stock. So you don't have to spend hours and hours doing analysis. So let me show you how this works. We learned in the last class that the price chart is the plotting of the past performance of a stock for the purpose of analyzing market behavior. Now, this is going to be beneficial for us for many, many reasons, but you need to understand that the price chart is the primary tool of the technical trader. In the last lesson, we learned that there was three main views that we use with the price chart. There's the line chart, there's the bar chart, and there's the candlestick chart. The line chart, of course, is the most basic. It's just going to take the closing price of the day and draw the line connecting each of those. It's going to be a nice, clean chart that gives us some really good benefits for some things, but it's not giving us all the information that we need in terms of the open, the high, the low, and the close. So that's where the bar chart comes in. The bar chart shows us all of that information, the open, the high, the low, and the close, and we can see all of this in one location, one chart. We read these from left to right. Of course, the little left hash mark indicates the opening price of the day. The high and the low is indicated on the vertical axis of the bar, and then the right hash mark indicates the closing price of the day. Well, the bar chart, for most purposes, gives us all the information we need, but it becomes a challenge because all those little bars start to kind of run together. So we introduced you to the candlestick chart. Candlesticks come to us from Japan, and one of the great benefits of the candlesticks is that they add some color to this open, high, low, and close information. It literally makes it black and white. And so you can see here, if we've got a white candle, we've got a higher close than open. And if we've got a black candle, then we've got a lower close than open. Now, the question then becomes, as we approach this stock, how do we start drawing lines on the chart? So here's the process that we're going to use. The first thing you want to do is you want to start with a line chart. Remember, the line chart's the most basic. It's just the line drawing the connecting dots together. Start with a line chart. That'll give us a nice clean turning point to draw off of. The next thing we want to do is we want to draw the highest point on the chart and the lowest point on the chart. The highest point and the lowest point, this is going to kind of help us frame the chart. If you just look at a stock that you've never looked at before and you've got all these lines going up and down, it might be a little bit random looking to you. So by putting this high here and this low here, it gives us some boundaries and we can start to frame what that chart is going to look like. Now, the next thing we want to do is we want to come through and we want to draw a line connecting all the support and resistance points. And so we're looking for a minimum of 2 points to make a line. And ideally, we're going to have 3 points or more. When we have 3 or more points, we start to have some trends in there, and it starts to be a more consistent turning point for that individual stock. Now, the next thing you want to do is you want to be looking and trying to identify any price point where the stock hits that price point and turns multiple times. The more times that a stock hits that point and turns, the more important that price is. And then finally, once you're done charting the stock, once you've put all your lines on the chart, the last thing we want to do is we want to flip over to our candlesticks and see if we get any additional confirmation of the lines that we've just drawn. All right, so let's do this. This is kind of a theoretical version, a textbook version, and then we're going to go do some real-world analysis here in the next video chunk. But for now, here's the way we're going to start this. We're going to start with a line chart. That's what you see on the screen. Now, the next thing we need to do is we need to draw the high and the low. So right here across the bottom, you see the low, and now we've drawn the high. Now notice what we've done here. We've kind of framed in this particular chart that we're looking at. Now the next thing we want to do is we want to move a horizontal line in and connect as many points as we can, a minimum of 2 points. All right, so I typically do this from the bottom up. You can do it from the top down. But what you notice here is we've taken a line and we've simply drawn a line where these turning points start to appear. Now what we've got is we've got a chart that kind of has a grid that it can trade through. And this grid, what you're going to find is these grids, they get established and they stay in place for years on end. Okay, so that's the basic idea right there. What we're going to do in a few minutes here in the next video is we're going to actually go into to a charting software and do this from scratch. But I just want you to kind of have a basic textbook theoretical version of this to get started. Now before we get to that next chunk, I want to just kind of go through a couple of notes on line drawing and some things that you need to remember. The first thing you need to remember is that a stock can touch a line from either the top or the bottom. It can be support or resistance. And so it may be support on one side and it may be resistance on the other side, and that qualifies as your two touches. Okay, so that's the first thing you need to know about your line drawing. The next thing is you need to start on your chart with a minimum of 2 to 3 years. I do this with a daily chart, typically speaking, but you need to have at least 2 to 3 years. I tend to do this on screens that have a good resolution, so I usually can use 5 to 7 years of data. And basically, the more data you can put on the screen, the better your charting is going to look. Again, I start with a daily chart. A daily chart's a fine time frame to start with. If you need to go up to a weekly chart because you have a really small screen for whatever reason, you can do that, but you've got to come back to the daily chart so you can really make sure you're getting those turning points on a more reasonable time frame. If you're a day trader, you're going to want to start with a daily chart, get those lines drawn, and then you can go into the intraday chart, and you're also going to probably want to draw some lines from there as well. All right, in the next video, we're going to actually get into the charting software, and we're going to draw and chart some stocks from scratch.